Welcome back. Just keep an eye out on Havells. That stock's moved to the low point of trade. This morning, we got a downgrade coming in from CLSA on that counter. In fact, they believe that at 44 times FY25 price to earnings, they see valuations as unfavorable, and we are seeing the impact of that on the stock at the low point of trade. But let's talk about another company, SJS Enterprises. Well, they posted a strong set of third quarter numbers. The revenue for the company is up 21%. The margins up by 50 basis points year on year as well. There has been some sequential slowdown, and as a result of which we are seeing a decline in the stock price as well. Sanjay Thapar, who's the ED and CEO of the company, joins us now to detail those numbers, but more importantly, the outlook going forward. Sanjay, thank you for joining in. We've spoken in the past, and I was looking at the presentation that you've put out for your investors as well. Both of them are at a bit of a divergence. In the past, you've said that you target 25% revenue growth in this year with 30% profit growth. However, in the presentation, you've written you target 20% growth with 20 to 25% sort of profit growth. So should we consider that as a guidance cut, and which is why the street is a little disappointed?
So to answer that question, if you look at our 9-month numbers, so we have grown at 20%. And our EBITDA has grown by 30%, so we are bang on target. Essentially, the only thing that is impacting us, and that is why I'm open with the street to tell you that the export volumes, because of this ongoing war in Europe, so we're dependent on Europe and North American markets for our export business, and that is slowed down because of these macroeconomic challenges you have in terms of rising inflation, rising fuel costs. So those are the things that have not picked up in this fourth quarter. And that's why we are saying that our business is absolutely on target in terms of whatever we promised. But in the near term, we feel that revenue growth could be a little lower, and margins still remain strong at 25% growth on PAT. So I think overall it's a good set of numbers.
Yeah, it is. Quarter 3 is good, but the thing is that since 9 months in 9 months you have reported a 25% revenue growth and profit growth of 30%. So it looked like that you are scaling down your guidance, and that's the reason the stock is lower as well. You spoke about exports being a little weak this time around. In the first half, it saw 16% decline. What was the export performance in quarter 3, and what do you expect the year to end with? Because quarter 4, we are almost done with that as well. What kind of decline or what kind of numbers will the export markets report this time?
So let me put this in context. So for the half year that we declared results last time around, so we were growing at 26.5% YOY. The domestic demand more than supplemented the lack of export demand, primarily due to this war that's ongoing in Europe and the challenges you have in terms of sentiment, both in Europe and North America. So that we were hoping for a recovery, and that is why we stayed with our guidance. Now that we have seen Q3, we are still at 25% CAGR in terms of revenue growth and a 30% CAGR in terms of profit growth. But even quarter 4 is a little subdued. Therefore, we are saying that the numbers are slightly down. So structurally, there's nothing wrong with the business. We've not lost any business, any customer. So it's just a situation about external factors playing in. So we are in absolute transparency saying that we could still hope for a 20-25% growth in PAT. So that's what we've guided the market.
Okay.
It's not at such a variance. Sorry, it's not at such a variance from the original guidance that we have. So we've consistently delivered this 25% growth that we've been talking about. And over the medium term, we still remain bullish on this 25% growth and 30% growth in profit. That's what we are guiding the market still at.
Okay. Mr. Thapar, in fact, I think you've added 2 clients in this quarter. Foxconn in your EV segment, and within your consumer durable segment, you've added IFB Industries as well. Can you just tell us how much do you think you're going to make from these 2 particular orders? What are they worth? Is it a continuation of an earlier order that you already had? Are they fresh customers?
No, so these are fresh customers, and they are very large customers. So Foxconn, as you may know, is one of the largest assemblers of electronic components. Earlier on your show, I guided that, when localization of these display screens in India comes, so we are actively working on that area. So we won business from Foxconn for a EV display. So we supply a part which is a cover lens, and this is a new business. The potential is immense. So this is just starting this whole business, and in the future, I think all EVs.
When you say potential is immense, Mr. Thapar, just give us a number. How much do you think you can probably make in FY24 based on visibility, the quantum of these two order wins?
The first business is almost about 5 crores in terms of revenues. But as I said, any new product takes time to get to the market, and what is deployed across other models. So this is starting of that traction. So that's more significant from that perspective, that this opens the doors to a very fruitful relationship, and we think this volume will increase further. So it depends, the guidance in terms of what numbers will that come by, I would not like to quote that specifically, but there's a lot of opportunity where all these vehicles will require products like this. So moving forward.
You know, just before we let you go, wanted to know, the last time you joined us, you said you're in advanced negotiations for an acquisition. Where has that gone right now, and when can we hear about it?
So I will make that announcement once we close the deal. So it is still work in process. So I would not like to guide you at this moment. But be sure that as soon as we conclude, we will come out with an announcement.
All right, Mr. Thapar, so we'll have a conversation on that day, but thank you so much for joining us and making sense of Q3 numbers, the demand trends as well, and the outlook going forward. That's the word coming in from SJS Enterprises. The stock is lower by 6.5% in trade today. Time for a break now. On the other side, we'll speak to the management of Rainbow Children's Hospital on their quarterly performance. Stay tuned.